Egyptians, going back to that point, 20 to 30% money supply growth is happening, and there's very few ways to opt out of it other than power users getting into to Bitcoin.
Yeah.
Before they were competing basically with gold,
Yeah.
or smaller countries are competing with the dollar. And so they're competing with something, if it's gold case, they're competing with something that grows at 2% a year and is really slow. If they're competing with the dollar, they're competing with something that grows at 7% a year, but is pretty fast and usually gives you a yield that gives you some of that 7% back. Whereas now they're competing with Bitcoin that has zero long-term supply growth and is basically as fast as the dollar. And that's a much harder competition to go against. So I think it to the extent that Bitcoin gets another 10x or notably bigger from here and really kind of eats into fiat currency markets more, it really reduces the ability of all these different entities around the world to capture that scale of seigniorage.
What all do you try to look at in terms of inflation and its adverse impacts?
One is to kind of break it up and kind of point out what it is. So a lot of people, of course, think of price inflation.
Yeah.
I prefer to think of dilution, which is, for example, if you're holding a fiat currency, developed market fiat currencies historically grow in supply by about 7% per year on average. And so even if you're getting a yield, if you're getting, say, 3% or 4%, but you're getting diluted by units by 7%, your share of the network is shrinking.
Yeah.
And then you can think of that as other things. Like, for example, if you own a stock, are you getting diluted or are you getting or some of them buying back their own stock and you're holding up well? So it's often best to think of it in terms of being diluted.
Yeah.
And when you have that kind of foundation, inflation, like, if you look at, say, over time, money supply is growing up by 7% a year, but we are getting, say, every year we're getting usually 2, 3, 4% more productive, more efficient at making things. We see this most readily in electronics.
Yeah.
We see it less so in gold or energy or something like that, like more tangible home building. So there's a spectrum there. And so the other element of that is that basically inflation's a spectrum. And so there are some things that are close to pretty scarce. And so they actually tend to go up in price roughly in line with money supply growth.
Yeah.
And that includes fine art, that includes waterfront property. Sometimes things can go even up faster than money supply growth if you happen to, for example, predict years or decades ahead of time which population center is going to boom, or which artist is going to take off in terms of be the most popular one. But basically, the truly kind of scarce, lindy things, they kind of go up the fastest. Then you have semi-scarce things. So gold, it's increasing its supply by 1 to 2% per year. So if you map out its price performance, it kind of matches. So it's like, if you take into account the dilution, it's, slightly underperforming money supply growth, but roughly in line with its dilution rate. And then you look at oils doing something similar, but even a little worse. When you get into like agricultural commodities, they don't hold up very well at all because they're way more abundant. And then when you get into like electronics, they're outright, collapsing in value all the time. And so you have this big spectrum. And that actually misleads people because they think inflation is measured from zero, whereas really inflation is measured from a negative number because we're getting more productive. So prices, if we had this kind of flat ledger, like a finite ledger, prices would be going down. So even some inflation just gets us back up to zero, let alone positive inflation, which we all experience.
Do you think there is a connection between monetary inflation and, let's say, less purely economic phenomenon?
I think there are, because it hurts productivity. And one way to quantify this is, in addition, like a lot of people focus on savings being eroded, which is valid, but it's also every single contract in society gets impacted by inflation. Like, imagine if you could push a button and every contract in the entire country gets shifted in one party's favor. That's what inflation does. Yeah. So if I was running a business making widgets and you're in a retail business that buys my widgets, we don't want to figure out every day how many I'm going to sell you and at what price. You're going to try to make a contract with me that maybe is 6 months or 12 months. And in a stable price environment, we have good foresight into what kind of pricing we're going to do. And but in a highly inflationary environment, we have to now make shorter agreements and remake those more regularly because neither of us knows what the money's going to be worth in a month or 3 months. So we have to now do more administrative overhead because money is inflating faster. And then that's true for also every single wage earner. Every single wage earner or salary worker is a contract with a company to earn a certain amount per unit of time or unit of work, whatever the case may be. And the government is able to kind of shift that contract. And so that, I think, has really big implications. And I use Egypt as an example because I lived there for part of each year. their money supply is growing at 20 to 30% per year.
It's crazy.
And so if you're operating in that environment, you're earning a wage, you're a small business. And I know wage earners and small business owners there. And I asked them, like, are you getting a 20% raise every year? Are you raising your small business prices to customers 20% every single year? And usually the answer is no. And so they're, even though they're trying to keep up, they're getting kind of diluted in the system that they operate in. And that's what really messes up the social contract.
How does Bitcoin then come into the picture? And is it a viable solution to this trend toward centralization we have seen in the gold era?
So I think it's by far the best shot we have. I always hesitate to say that it's like inevitable, but basically it's the most credible way we have to get past this period of centralization. So for about 150 years, we've been in the period where, going back to my prior point, transaction speeds were speed of light, physical settlement was still slow. We finally invented fast settlement. Satoshi and all his predecessors finally figured out fast settlements.
Yes.
And then, we're kind of watching that catch on. It has to go through the massive network effect. It's up against the $100 trillion network effect of the dollar, the multi-$100 trillion network effect of fiat currencies globally, the whole global bond market, and all the governments tied to it. So this little open source thing is kind of doing this multi-decade path through this very entrenched system. It's gradually succeeding. It has things to navigate. It had to, navigate big countries trying to ban it and then figuring out they kind of can't ban it. And, politicians realizing that there's nothing to gain really from donors or anyone else, from voters, for being anti-Bitcoin. But there is a lot to gain from being pro-Bitcoin. And so it's kind of going through that game theory over time. There's a couple countries that are ahead of the curve and say, well, if other countries are going to be slow and even anti, we're going to be the ones that embrace it. It still has to go through some challenges. Like, if we do have, quantum computers, it's got to be able to make that change. And that has implications for signature types and potentially even block size issues with the length of those new signature types. So it has to navigate still, I think, some challenges ahead. But it's by far the best chance we have. And it's something that it's kind of fundamental. Like even if society were to rerun this whole modernization period multiple times, kind of like how the bicycle would always come before the car, would always come before the airplane, because basically you kind of have the predecessor stuff kind of built into it. We always would have Morse code before we have something like Bitcoin.
Sure.
And, Morse code could be called different. It could have a different, alphabet equivalent, but it still is basically Morse code. Right. Kind of like how Bitcoin wouldn't necessarily have the exact parameters it has now, but something like Bitcoin, if you get to this period, would eventually emerge. And I think it we want it to succeed on the first try rather than have to kind of start this project all over again. If you look at some of those older European maps, they'd be a lot more fractured than what it kind of consolidated into. And I think to some extent that kind of can reemerge in the sense that while governments will, in most cases, in most regions, still exist in various capacities, they have less of just a full control over everything. Like, for example, the full banking system is currently under every country's control. They can go around that. And they have a much harder prospect of raising capital. Because, again, if Egyptians, going back to that point, 20 to 30% money supply growth is happening. And there's very few ways to opt out of it other than power users getting into Bitcoin. And even people that have gold stashed away, they still have bank accounts. There's always still some residual stuff being just kind of opaquely taken from them by this seigniorage, this debasement. And so it really just kind of closes the window of all these different issuers around the world for how much seigniorage they can get away with. Because they're competing with before they were competing basically with gold. Or smaller countries are competing with the dollar. And so they're competing with something. If it's gold case, they're competing with something that grows at 2% a year and is really slow. If they're competing with the dollar, they're competing with something that grows at 7% a year but is pretty fast and usually gives you a yield that gives you some of that 7% back. Whereas now they're competing with Bitcoin that has zero long-term supply growth and is basically as fast as the dollar. And that's a much harder competition to go against. So I think it to the extent that Bitcoin gets another 10x or notably bigger from here and really kind of eats into fiat currency markets more, it really reduces the ability of all these different entities around the world to capture that scale of seigniorage.
Does Bitcoin make government local again? Is that the direction we're headed?
It might. I think that the more conservative thing I would say is that it makes it more transparent in the sense that there might still be communities that want more government or want less government,
Yeah.
but at least they generally know what they're getting into. It's like they're saying, like, part of why we run, like, my talk here was called Nothing Stops This Train. I was talking about the fiscal deficits. It's because we can't agree on how we're going to balance things. So this error just keeps spilling out as we fail to agree with each other. And in a Bitcoinized world, that can't really happen. There, like, defaults happen before that just runs forever. Yeah. And so basically it says, well, we can still pay for this, but we actually have to tax for it. And so, and taxes are transparent. That's why if you go back to wars in the past, that's why even like older emperors and kings would debase their coinage, because it was a way to kind of go around the transparent tax system.
Yeah.
People revolt over taxes more than they, keep track of the exact metallic content of their coins. So it kind of just reduces the attack surface of how much can I opaquely steal from you?
Yes.
And so then, different places are free to still kind of choose how they want to govern themselves, and there still might be pockets of authoritarianism, unfortunately, but at least that opaque part is a much less viable option.
Forget what you think you know about inflation. Seriously. Today, we're plunging into some really profound insights from Lyn Alden. She's a major voice in finance, and she kind of reframes our whole understanding of money and its invisible impact on society, and Bitcoin's pretty astonishing role in challenging all that. This is The Deep Dive, brought to you by The Market Chronicles, episode 31. We're here to, cut through the noise and give you those crucial insights you really need. Oh, and if you're watching on YouTube, please do us a huge favor. Hit that subscribe button right now. You really won't want to miss the deep dives we unpack here. So, our mission today, it's clear. Extract the most powerful nuggets of knowledge from Alden's perspective. Help you become genuinely well-informed on these critical topics. Get ready for some real aha moments.
Definitely an essential reframing. Yeah. Because, most people just think inflation equals rising prices, like the cost of stuff going up.
Right, that's the standard view.
Yeah. But Alden argues that misses the deeper mechanism, the more fundamental thing happening. She uses a much more precise term, and frankly, it's kind of unsettling.
Dilution.
Dilution. Okay. Yeah, that immediately shifts the perspective, doesn't it? Mm. It suggests something's changing the value of the money itself, not just what it can buy. So when she talks about fiat currency, the regular government money we all use, how exactly does that dilute things?
Well, think about it like a network share. Historically, right, developed market fiat currencies, their supply grows about 7% a year, on average.
7%, okay.
Now, you might be earning, say, 3% or 4% yield on your savings, and that looks like growth, right, on the surface.
Sure seems like it.
But if the currency itself, the whole base, is expanding by 7% annually, your actual share of the network, your slice of the total economic pie, it's shrinking. Mm-hmm. You're getting diluted by that 7% expansion every year. It's quiet, it's continuous, but it's reducing your relative wealth. Wow. So it's not just that your money buys less, it's like your ownership stake in the whole system is just subtly eroding, like a company constantly issuing more stock, diluting existing shareholders.
Exactly like that.
And Alden really hammers this point, right? This foundation inflation, the money supply growing at 7%, while our actual productivity, how efficient we are at making stuff, only goes up maybe 2 to 4% a year. That gap, that's where the real story is.
Precisely. And this leads her to describe this spectrum of scarcity and productivity. It's a really useful way to think about it.
Okay.
At one end, you've got truly scarce assets. Think like a Picasso or prime waterfront property.
Yeah.
They aren't making any more of.
Right. Limited supply.
Exactly.
Yeah.
So these assets, because they're so limited, they often appreciate roughly in line with the money supply growth, sometimes even faster. Their scarcity is basically a natural hedge against that dilution.
Makes perfect sense. Their inherent rarity protects them. So what about assets that are, let's say, semi-scarce? Where do they fit?
Well, take gold. Its supply only increases, 1% to 2% a year from mining. Very slow.
Yeah.
So its price performance tends to track pretty closely with its own dilution rate.
Yeah.
Maybe slightly underperforms the overall money supply growth, but it holds value reasonably well.
Yeah.
Then you have other things like oil, similar, but maybe a bit more volatile.
Okay.
And then at the far end, you've got abundant assets like agricultural commodities. They really struggle against dilution. Just too much of them relative to demand sometimes.
Right.
But then, interestingly, high productivity goods like electronics, They actually collapse in value over time, not because of dilution, but because of innovation. We just get so much better, so much more efficient at making them cheaper and more powerful every year.
That's a key distinction. And it really brings us to this huge misconception Alden tackles, the idea that inflation is measured from zero. You hear 2% inflation, you think prices are just going up 2% from where they were.
Right, that's the common assumption.
But her point is, if we had truly stable money, like a fixed ledger, prices should actually be falling over time because we get more productive, we make things more efficiently.
Exactly. Productivity gains should mean lower prices.
So, as she puts it, even some inflation just gets us back up to zero.
Yeah.
It just cancels out the price drops that should be happening, let alone the positive inflation we usually see. That completely changes how you should view economic health, doesn't it?
It absolutely does. And this whole dilution concept, it goes way beyond just eroding your savings, although that's obviously a big concern. Alden makes this really powerful argument. Monetary inflation, this dilution, it affects every single contract in society, every single one.
Wow.
She uses this analogy like, imagine someone could just push a button and instantly shift the terms of every agreement in the country to favor one side. That, she says, is basically what monetary debasement, the government quietly devaluing the currency, actually does.
That is a profound way to put it. It's not just this passive erosion. It's an active, systemic reshaping of agreements, almost like a hidden tax, but broader.
Yeah, exactly.
Think about business contracts. If I make widgets, you buy them. In stable times, we can sign a deal for 6 months, maybe 12 months. We know the price means something.
Right. You have some certainty.
But in a high inflation world, neither of us knows what that money's going to be worth next month, let alone in 6 months. So we're forced into shorter deals, constant renegotiations, all this extra paperwork and headache. It's inefficient.
Totally inefficient. And that ripples right down to every single wage earner, every salaried worker. Your deal with your employer, your salary. That contract is also being implicitly shifted by this government debasement.
So your paycheck might say the same number, but what it actually buys is constantly shrinking.
Precisely. Alden uses this really stark example from Egypt, where she observed the money supply growing at like 20% to 30% per year.
20 to 30%, that's just staggering dilution. The human impact must be immense.
Oh, it is. She describes how wage earners, small business owners, they just cannot keep up. They're not getting 20, 30% raises every year. Small businesses can't hike prices that much without losing all their customers.
They're traps.
They're on this relentless treadmill that's just speeding up under them. It completely disrupts the social contract. People feel like no matter how hard they work, they're falling behind. It creates enormous societal pressure.
And that kind of pressure, that constant feeling of falling behind, naturally leads people to look for alternatives, right?
Right.
Which brings us to Bitcoin.
Exactly. Given this backdrop of perpetual dilution, of centralized control over money, Alden positions Bitcoin as, quote, by far the best shot we have to move past this era. She sees it as the most credible way toward a more stable, more transparent monetary future.
And it really is an evolution in the tech, isn't it? Like for 150 years, yeah, transactions got faster, but actually settling the asset, getting it finally moved, that was always slow. Physical stuff, paper trails.
Right, the finality took time.
But Satoshi and the folks before him, the cypherpunks, they finally cracked fast settlement with Bitcoin. But okay, let's be realistic here. It's not an easy fight. Bitcoin's up against enormous network effects. The dollar alone is like $100 trillion network.
Oh, huge.
Then you've got the whole global fiat system, hundreds of trillions, plus the global bond market, all tied to governments. Bitcoin's still this relatively young, open source thing trying to navigate this incredibly entrenched system. It's a multi-decade journey.
It absolutely is. And its progress, considering those challenges, is pretty remarkable. It's weathered attempts by big countries to ban it or suppress it. And over time, you see politicians realizing maybe being anti-Bitcoin isn't smart. Maybe there's actually something to gain economically, politically by being pro-Bitcoin.
Yeah, you see that shift happening.
There's definitely a game theory element playing out. Some countries are getting ahead of the curve, embracing it. Now, sure, there are still technical challenges ahead. Things like, quantum computing may be affecting signatures or block size down the road. But its core design, that fixed supply, makes it the strongest contender we have for real hard money.
It almost feels like something like Bitcoin was bound to emerge.
Yeah.
Like the bicycle came before the car, Morse code before the internet. If you reran modernization, some form of digital scarcity, something verifiable like Bitcoin, it feels like it would inevitably pop up as a foundational piece.
That's a good way to think about it.
Yeah.
And the really fundamental shift it introduces is how it drastically cuts down the ability of powerful entities, governments, banks, to capture seniorage.
Seniors, that's basically the profit made from issuing money, right? Like the difference between the face value and the cost to produce it. Or, more subtly, the profit from debasing it.
Exactly. It's historically been this powerful, kind of opaque way to tax people without calling it a tax. Before Bitcoin, the competition against that was, what, gold, which is slow, physical, and only grows its supply 1–2% a year.
Right. Or you could hold dollars, which are fast, but they dilute at 7% a year, even if you get some yield back.
But Bitcoin changes the game. It offers basically zero long-term supply growth, no more dilution from issuance, and it's fast, comparable to the dollar for settlement. That makes it, as Alden says, a much harder competition for anyone relying on debasement.
Yeah, it removes that tool.
And she points out, even if you stack physical gold, you probably still have a bank account, right? You still operate in the fiat system. So you're subject to this residual opaque taking through the debasement of your everyday cash. Bitcoin potentially closes the window on that hidden theft.
So what does this mean for how governments operate? Seems like it has huge implications.
Oh, absolutely. Alden suggests that while Bitcoin might not automatically make government local again everywhere, its biggest impact will likely be making it far more transparent.
More transparent, how so?
Well, think about government deficits. Right now, they can often run forever by just creating more money, by debasing the currency. In a world where Bitcoin is a major monetary force, that becomes much harder. Defaults happen before that, she argues. Governments would actually have to tax for it.
They'd have to be upfront about the cost of their spending, which is a massive shift.
Huge. And it connects right back to history, right? Emperors, kings, they'd shave bits off coins, debase a currency, precisely because people revolt more over direct, obvious taxes than they do over the slow, sneaky erosion of their money's value.
Yeah, the hidden tax is easier politically.
So Bitcoin essentially reduces the attack surface of how much can I opaquely steal from you. It forces fiscal reality out into the open.
Which means communities get more choice, potentially, in how they're governed because if the finances are clear.
Exactly. It forces a new level of accountability. Now, look, authoritarianism might still exist, sadly, but the opaque part, that reliance on hidden currency debasement to fund things, that becomes a much, much less viable option for those in power. It really changes the incentives.
Wow. What a really profound and, thought-provoking deep dive into Lyn Alden's perspective. So just to recap for everyone listening, we've seen how inflation isn't just rising prices. It's this fundamental dilution of currency eroding your share of the network.
Right, and how that dilution impacts basically every contract in society, business deals, your wages, everything.
And then we explored Bitcoin's emerging role, not as a magic bullet, maybe, but as this transparent, hard money alternative that really challenges those traditional levers of monetary power.
A very different kind of competitor.
Okay, so here's a final thought for you to chew on as you go about your day. If governments find themselves increasingly forced to fund things through transparent taxes, rather than just quietly debasing the currency, what kind of profound shifts might we actually see in how we engage with them, how we hold them accountable? What new possibilities does that open up for real societal accountability and maybe rethinking our collective priorities?
It certainly points towards a future where understanding monetary policy and its often hidden effects becomes even more crucial for all of us.
Absolutely. Something to really reflect on. Think about how these ideas might connect to your own finances, your own view of the economy. Thanks so much for joining us on this deep dive into the fascinating world of monetary economics. We'll catch you on the next one.